Hello YouTube and welcome back to another video. Today we're going to be talking about whether or not the W potential is real, meaning how are these bulls going to win and actually get us back above our 50 daily moving average and back above 400? That is the big question for today. So providing an update from the weekend, I think what's really important for us to understand is just where do we sit in terms of the technical chart? As of right now, we can note that we got three colored lines on here. We have two gaps. We got a gap to the upside. We got a small gap to the downside. What would that tell us? Well, this larger gap probably wants to get filled. If the true move is going to be down, we probably have to fill this upper gap here. Would not be healthy. Second thing is that this lower gap here is quite small, and we've back tested it a few times, and it's actually pretty close to getting filled. Next thing is we got three different levels here. We got a red line, we got a green line, and a pink line. Green means support, red means resistance, pink means important or pivot. So where are we right now? We're resting on a pivot. Why does this matter? It matters because this expansion right here is it is tracking the largest gain streak we've had so far this year. I'm talking about us having 1, 2, 3, 4 up days. However, why is this different? This one's actually more bullish than the previous one because closed higher than we open, 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 open, open. If we go to hollow candles, we're now going to see that, that's right, red and red. Red because we closed lower than the previous session. But when we go to a full candle, it's green because we closed higher than we opened. So that's like kind of really important. Yes, that is very important. And the technical pattern that I'm noticing here is a W. So how can we make it all the way up here to the top and actually continue higher? I talked about this, but I will repeat myself again here one more time. So again, there's more notes on the weekend here, but there is another W pattern forming inside of here. And what I am personally looking for is for the W. I'm not saying we're going to break higher after the W gets completed. I'm just saying that I see strong potential for us to at least get to 400 to eventually fill the gap, if not even higher. This week is monthly OPEX. It's going to be very important for us to pay attention to that as well. And this 385 number here is very, very, very spicy. So anyways, looking back to where we were, we got the two W's formed. Okay, that's easy enough to understand. Now let's remove the other one again here. What did we have before the W got formed? Well, first thing we have is we have a big old low. So we got this big old low right here, which is what we currently formed at the yearly low at roughly 362. Then after we stage that, what do? We build up steam, we form a higher low, build up steam, form a higher low, roughly test our neckline. Once we get back above that, what happened? We went higher to complete the pattern. So that is how a W gets formed. We form an area of support, we form a higher low, and then we advance. It's literally that simple. There's our area support, there's our higher low, and there's our key relative low. What are we? We're already above it. So we're already above it. The W is forming, not formed. All right, so there you go. And again, what's really important for people to remember here is that the market does not care about your feelings. Whether you think we're going to go down or you think we're going to go up, just make sure you have a clear plan. Again, I've been bearish for quite some time, and I think that the bear story is getting a little bit tired. Everyone already knows that we're either going into recession or we are in recession or it's going to be coming shortly. I'm going to talk about that in a moment here. But last thing I want to point out is just that if you think that, oh, well, look, we're red today, it's over, the bears are in control again. You have to remember that a weekly chart is going to be a combination of 5 daily candles. And as of right now, if we go back over here to our weekly chart on SPY, why does this matter? It matters a lot, whether you know it or not. Hopefully you will learn something here. And again, not that I have all the answers, I just have experience for what's worked for me. So as I'm looking here, what do we have? Low, higher, low, higher, low, higher, low, higher, low, high, higher, high, higher, high, lower, high. So for the last 3 candles now, we have inside bars. So that's the range that got established. That's a higher low and a lower high. And then we have a lower high and a higher low. So whichever way this breaks, meaning if we take out the high from last week, or take out the low, that is going to be a period where we came down, we consolidated, and now we're waiting for the true move. The true move is going to be very, 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 very important. So what you also want to think about is if this is the low of the week, does it make sense? If we were to look back on Friday, if we go straight up from here, would that make sense? I think the answer is yes. We back tested this gap here at 383.9 and we bounced. Yeah, it's really not that complicated. We went about 40 cents lower and we bounced up to close at 385. At the end of the video, I will review the options chain and the reason why we closed at roughly 385. It's very obvious. It's options. So if you understand that, and now you know that it's OPEX on Friday, meaning the big expiry is coming on Friday, that really matters. And where we sit from right here versus where we're going to go, I'm not entirely sure. But what is forming right now? Oh man, there's actually an uptrend forming. Yes, sir. You got it. So what do we have? We have resistance. If we get above resistance, what is that? That's a bull break. Getting back above the 50 daily would mean that we're getting more bullish. Filling the gap and advancing, even more bullish. Taking back out 410.64, which is going to be our low going back to February of 2022, or our second quarter low. That's where we start to squeeze. And if we break support here, what does it mean? Well, it means that we're losing the pivot. We're going to be below support. Being below support means that we are no longer trending up. This is invalid. The bears are back in control. We leave a gap on the chart, and we just continue to fade. There you go, right? At a high level, I think that's very important for people to understand. Where are we coming from, and where are we going to be on Friday when we get to that monthly expiry? So it's important because there's a lot of data coming out. There's a hole between today and Wednesday, and there's also no options expiry tomorrow. So what does that mean? Tomorrow's a day for the bulls and bears to jockey for position in terms of who really wants it. And again, when we look at the options chain, we'll know who was jockeying. Right now, it's mostly the bears. So let the bears do it. Actually, something I forgot to mention here too is that we are coming right back down to a key pivot. But what I forgot to mention is that the dollar is up today by 1.2%. The S&P 500 is down by 1.12. So what does that mean? If the dollar was flat, S&P would be flat. And after the biggest win streak so far this year, closing out the high of the week and looking for more, I think that's bullish. I think it's actually pretty bullish because Jerome last week actually had some pretty hawkish commentary, and that's not taking us down. So if bad news can't take us down, what can take us up? Good news. And I have some good news to review in a moment. So again, the dollar is absolutely crushing it. And because we got above 105.8, that means that we are now back above I think it goes all the way back to 1987. Let's have a look at this really fast here, and then I do want to move forward because I have a couple of articles to go through in terms of the recession. So again, looking back to the DXY, or the dollar index, we can note that we got that same W pattern formed, not forming. It is formed. What is happening? Continuation. So this W pattern is going to be very bullish. We also have a weekly golden cross, which means that the short-term price is greater than the long-term price. Now we look at this red line here, 106.5. We can note where that comes from. We're now bullishly breaking above an area that we had going all the way back to 1989. I was 1 year old at the time. And we can note here that this is a multi-decade head and shoulders pattern. So if we broke above the neckline, where could we go? Back up to roughly 120. That's your bear scenario. And an earnings recession is how we're likely going to get taken down. All right, now let's shift over here to try to understand what could be the bullish scenario. And again, what I'm talking about here is potential. So please make sure you listen up, because I'm not saying we have to go higher. I'm saying that the bull case in terms of fundamentals and technicals is getting stronger. And you don't know the trend changed until you look back. So that's what we're trying to find out. Is there a trend change happening, not happened? So on Wednesday, we're going to get that early feedback. And I'm not sure which way it's going to go, but I'm watching really closely. After that, we got Bank of Canada. Again, probably going to move the dollar, right? If Bank of Canada raises rates, dollar's going to come down a little bit. That could give us a lift to the SPY if sentiment does not get hurt. Next thing is that we got PPI coming out on Thursday, Producer Price Index. Earnings kicking off really officially on Thursday, but we have some earnings trickling out. China Q2 GDP. This is going to be the reading coming in before America. So we're going to find out whether or not China is contracting again. I think they are. Retail sales on Friday, and then monthly OPEX. I go through these key dates as well on the weekend review. I encourage you to watch it if you want to know more. So what is a recession? A recession is a macroeconomic term that refers to a significant decline in general economic activity in a designated region. It is typically recognized as 2 consecutive quarters of economic decline, as reflected by GDP, in conjunction with monthly indicators such as rise in unemployment. So, however, the National Bureau of Economic Research, NBER, which officially declares recession, says the 2 consecutive quarters of decline in real GDP are how it is defined. It is not how it's defined anymore. So the NBAR defines a recession as a significant decline in economic activity spread across the economy, lasting more than a few months, normally visible in real GDP, real income, employment, industrial production, and wholesale retail sales. So right now, the Atlanta Fed is projecting that we are going to be contracting by 1.23% into Q2. Why does this matter? Well, if the classical definition of a recession is 2 quarters of contraction, that would be our second one. So why is this important? It's really important because there's a caveat. The caveat is that we've had really strong jobs. So we are adding almost 400,000 jobs for the month of June. So that does not meet the definition of broad-based economic weakness. GDP contracting is one of the things that leads us to a recession. But there is an agency which actually confirms whether or not a recession actually happened. So if that's the case, again, Larry Summers over the weekend on Bloomberg Business Week told us that he believes that we are going to avoid a recession. He thinks the odds of recession are actually lower today than they were when he sounded the alarm bell a couple of weeks ago and a couple months ago. Whoa, that sounds like a bullish surprise. Absolutely. And again, if a recession is coming, investors are turning to earnings for clues. Again, an earnings recession, which we talked about before. So as earnings season really kicks off and where we are on Friday, we're really going to find out where this market wants to go. I'm also noticing that, we look at the flow so far this week and orders over 100,000 or large premium contracts. 2/3 of them are bearish. We got a 2.1 put call ratio. This tells me that people are either quite bearish or they are buying insurance. So now as we flip back here to the chart and try to wrap up the story, I want to look at the options chain. And again, keep what I mentioned in mind from before. There is the ability for people to buy insurance or to position bear. So if we try to ask ourselves, barring today being OPEX, does it make sense we close at 385? Absolutely. Let's have a look and see here. Whoa, 100,000 options at 386 put, 350,000 at 385, 382,000 at 384, 100,000 stacks going all the way down to 380. Whoa, burnt. All those babies are burnt. On the call side, yep, 350,000 at 385, almost 300,000 at 386, 100,000 going up to 390. These guys are betting on a 5-point swing. Maximum pain is right here at 385. Option sellers are in full control. All these were basically burnt. Every single call burnt. All the puts other than 386 and some of the 385s, because after hours were basically back there, all burnt. So again, the motivation for today was that the option sellers were in full control. There we go. There's also fears about, again, a certain country over in Asia, about more lockdowns and contagion or fear. Again, if we look at the options chain, it's very easy to understand what happened. We can note here that we got open interest for 378 going into Wednesday, which is when we have that CPI print. And we've got 385 back down to 380 again. It's the same numbers. That's correct. It's the same numbers. On the call side, what do we have? 385 up to where? 390, even all the way up here to 392. And there's a lot of activity in between. I would actually give this one here to the bulls. Why? They're not buying just one strike. They're buying multiples. But the bears are equally motivated, so I would call that one unch or unchanged. The one that really matters is going to be the one on Friday. Friday is going to be our monthly expiry, which happens once a month. So again, this is our monthly expiry on July 15th, looking at the 16s. And here we note that, I get it. So again, they really want to pay. They really want to get paid for these 380 puts. Why? There's a whole bunch of open interest here. And that's the first strike that sticks out to me. It's continuation from where we are right now. We're not looking beyond the 16s or what is most likely going to hit, but big old put start at 385 again. There's open interest at 390, which means these bears cannot be more motivated to crank the chart lower. If all they can do is get it to track the dollar, I think that they kind of suck. That's my opinion right now. In terms of calls, 380, 385, 390. And now that we're on the 16s, they seem equally motivated. 385 going into Friday is where I personally see max pain. It could be higher, it could be lower. That's just where I personally see it. So I'm not really noticing very much, again, if we think we're bullish or we're bearish, there's no one really willing to stick their neck out and buy. What people are buying are mostly puts for the broader market, which is very notable. And as we have a look here to the next monthly expiry, I noticed this right here really, really well. 380 put continuation. It's the only option that has more than 10,000 in volume. And the call side here, oh, actually, they're building a straddle. Oops, I didn't even notice that. So if they're building a straddle, this is very important. Why is it really important now that I notice it? Because a straddle implies a move in either direction. They don't really care which way it goes. They just want it to move big time. So more puts than calls, which means they're probably leaning a little bit bearish. But we got $10 and $15 in premium, which would imply what? Well, that implies 380 minus 25, which is 355, which is basically our 50 weekly moving average, which is my target, or plus 25. 405. We fill the upper gap. That's correct. So with that said, that is all that I have to go through for today. If you enjoyed the video, I would really appreciate a thumbs up. Drop me a comment. And the video that queues up here in a moment will give you a deeper review in terms of how I got prepared for this week and where I think we're going to go. Otherwise, thank you for watching, and I look forward to seeing you in the next video. Thank you.